What's up, HyperFast agent? On this episode of the podcast, I sat down with someone who's been a real estate investor for nearly 20 years. He got his start in 2003, did 18 deals in his first 18 months. He focused on rent-to-own properties, has now done a lot of multifamilies in the last several years. He's created educational content and podcasts and has become one of the leading authorities and trainers for mom and pop investors, people looking to learn how to raise money for their first, second, third, fourth deal. Welcome to the show, David Dubeau. Welcome back to the show today, David. How are you doing?
Dan, I am fantastic. Great to see you again, my friend.
Yeah, it's exciting to have you back on, particularly today, because I know you've got a new podcast and a new type of training and educational series that you've been rolling out about how investors that are starting or have never raised capital before can do it. And I think there's, a lot of good areas we can talk about or where that could apply to. One of them, though, that I think we should dive in a little bit today is on short-term rentals, because that has been a hot spot in the market. And, everyone loves the high cash flow you can get. But, why don't you give yourself a little bit of a background for those who, didn't see the first episode we did, and then we can dive into how you might raise capital if you are looking to get your first Airbnb.
Yeah, no, that sounds great. So thanks, Dan. Yeah, so I've been in the real estate game one way or another since about 2001. Started off doing a couple of what we would call pre-foreclosure deals way down in San Jose, Costa Rica, which is where I was living for about 10 years. Moved my traumatized Costa Rican family back to Canada in 2003. I say traumatized because it went from the tropics to the frozen hinterlands of Canada. And that's where I jumped into real estate investing, doing creative, low money, no money down type deals for a while. Then switched into single family homes around 2010. And that's where I started raising capital for deals, because sooner or later we tend to run out of cash and credit to do more properties. So that's when I bumbled around, failed miserably at raising capital initially, trying to do all the, old school dialing for dollars, networking, schmoozing, all that kind of stuff that I wasn't very good at. Plus, I was doing it backwards, right? I'd heard the old adage, just find a good deal and the money will find you, which I think is complete BS.
Yeah, a lot of people say that, and it's.
I think a lot of people say that.
Half truth at most.
Well, I think if somebody's in your position at this time, or they've got a platform, or they've got a large group of followers, then yeah, that can work. So that's where that comes from. However, if you're a mom and pop real estate investor just getting started, and you wait till you got a deal on the go, kind of like I did back in the day, then it doesn't really matter how good that deal is. If you're under real time crunch to raise the money, that desperation is going to ooze out of every pore in your body, and it's going to kind of repel people instead of attracting them. So I switched my philosophy. I went from chasing the money to applying intelligent marketing to get investors coming to me instead of me chasing after them. So that worked really well for myself. We've started working with clients because I've got a marketing background. So now we've got basically a boutique marketing agency. We work with mom and pop real estate investors, help them implement everything to raise capital themselves, find their own private investors. So that's in a snapshot my background.
Well, what would you tell someone who's looking to buy an Airbnb and that's going to be double digit, cash on cash returns, but they don't have the capital to do it?
Yeah, that's a really good question, Dan. So first of all, hopefully you've done one or two deals on your own, under your own financial steam. So you've got a little bit of a track record. You don't have to have a ton of experience, but at least even just one successful deal is all you really need to show as a case study. Now, if you're starting absolutely from scratch, it's your very first deal, you don't have any cash, you don't have any credit, you don't have any experience, that's tougher. I'm not going to blow smoke at you. There's no simple answer to that. I would highly recommend, if you at all can do a deal on your own, do that. Or partner with somebody who's already doing those kind of deals. Come on board with your own capital and or your own sweat equity. Get a piece of that deal and then get involved that way so that you pay to play, and you can use that as an example, as a case study. Does that make sense, Dan? So ideally, you've got at least one under your belt. Now, we've got
the track record helps.
Oh, it's huge. I mean,
and if you don't have if you haven't done your first deal that way, another thing you could do is go out and manage an Airbnb for someone, right? Like there's other ways to kind of get in and get something that you can point to help boost your credibility.
You either put in actual money into a deal, or you put your own time, effort, and sweat into a deal to hopefully, instead of just getting paid by the hour or whatever, you're getting at least, even if it's just a sliver of equity in the deal. That way you can legitimately hold that up and say, hey, here's a project I've been involved in. Does that make sense, Dan?
Yep.
Yeah. So then if you've got that, let's assume somebody's got one or two deals under their belt, then it's so much easier. And then we go through what I call my money partner formula process here. And basically, it's all about creating a target group of potential investors, laser focusing on them. That's the easiest, fastest, quickest, safest way to get started with raising capital, because so many people charge out and they're trying to raise capital from the general public. Big mistake. Plus, it can be illegal. Not giving any legal or financial advice here, right? But you got to be careful with the Securities and Exchange Commission. So again, laser focus on a target group of potential investors. Have a really good marketing platform set up. Have a really good presentation you can show people about that, and then get started on the right foot, not by talking about business right off the get-go. Chances are that target group of people, a lot of them haven't heard from you in a while, so break the ice first. We call that a warm-up campaign, and then set the stage for the marketing that's going to be coming down the pipeline. Then my favorite thing is what's called edutaining marketing, Dan. So we want to get the word out via electronic newsletters, video logs, blog posts, what have you, in a little bit of educational manner, but hopefully a bit of an entertaining manner as well. And our whole goal is not to sell a deal, it's to sell people on the idea of meeting with us and having a conversation about our deals. Yeah.
I like that idea of edutaining them, right? And building that credibility and that relationship up front, before you ask them for money. I think that helps a ton, right?
Hey, Dan,
what are some examples of that? How do you do that?
Of the edutaining marketing?
Yeah.
Yeah. So for example, when we're working with clients one-on-one, we will set up a monthly newsletter that'll be going out to their list of potential investors. And part of that newsletter is educating them about, for example, part of what you do are Airbnbs. So let's say you were trying to raise capital for doing more Airbnb deals, then you'd be educating people about the big benefits of Airbnb. But you don't go overboard in one newsletter. You just have bite-sized chunks, right? And then in the same newsletter, you talk a little bit about what you and the family have been up to. Not real estate related, just personal related. You, the kids, the wife, all that kind of good stuff. Pictures, trips you've been on, favorite movies you've seen, that kind of stuff, right? So it's a little bit educational, hopefully a little bit entertaining. It engages people. And then we have a clear call to action. Hey, if you'd like to find out more about what we're up to with real estate investing and how you can benefit, click on the link below, book a time and a day and a time for a quick call. Let's have a conversation, see how this can work for you.
Hold that thought for a second. Did you know I've been involved in developing and building hundreds of homes? And did you know that we take partner investors in our deals? If you want to learn about new opportunities that we have for real estate investors, go to my Instagram account, it's @Lesniak, and send me a direct message. Again, if you want to learn about my next opportunities for real estate investor partners, go to my Instagram @Lesniak and send me a direct message. Yeah, I love all of what you just said. Like, you're giving value, information. You're making a personal connection in there by giving them the family update, and then a way to connect with you.
A clear call to action. Tell them exactly
right.
what you want them to do. Exactly.
What are some different ways that you've seen these these raises or capital infusions at the beginner level, small level? Like how are they typically structured?
Yeah, so for example, let's use the Airbnb example there. Quite often what we'll see is our clients will focus on getting an investor partner on board who's going to bring in the capital for the down payment to purchase the property, potentially the capital for doing the renovations on the property, even perhaps the capital for furnishing the property. So the investor brings in all of the capital, the real estate entrepreneur brings in the deal, brings in the management, brings in the know-how, brings in the experience, and they partner on that as a joint venture. Perhaps they both go on title on the property, and they have co-ownership on that property, but they have their responsibilities very clearly defined. And then typically in that kind of situation, it's usually a 50-50 revenue split.
Okay, so...
Profit, I should say, not revenue. 50-50 profit split.
In this scenario, you're kind of valuing the capital to do the deal at 50%, and then finding the deal, putting it all together, managing it is valued at 50%.
Exactly.
As well.
Yep. Yeah, that's how that works. Same thing with BRRRRs or all sorts of single-family homes, small multis, lots of different things are done that way.
Is this something that is complex to set up, or how do you kind of legally paper that? What's the simple?
Well, it's going to depend. We work with clients all across North America, so the laws are a little bit different in the States versus Canada. State to state is slightly different. So we always recommend that our clients talk with a local real estate attorney and find out what is the best way to structure that. In some cases, it might be done within a corporate structure. In other cases, it might just be the two people on title in the property. Typically in the States, it's done via a corporation.
Okay. So basically talk to some local
Exactly, because every state's slightly different, right?
What else should people know about raising capital at these levels?
Well, okay, so here several philosophical things that we can be taking a look at. First thing is, which comes first, the money or the deal? In my opinion, you should be getting your investor prospects lined up ahead of time and then go looking for the deals. Because we hear all the gurus say, hey, find a good deal, the money will find you. I don't agree with that. So it's far, far better if you've got a bunch of what we would call soft commitments, or people have signed off on an expression of interest saying, hey, you know what, Dan, when you've got one of these Airbnb deals, I want first dibs. I want first opportunity to take advantage of that. Get a number of those people lined up. Then you can go out, you can make offers, you can close on properties, you can negotiate a lot harder because you know that you've got the capital lined up to do it. So that's idea number one. The other thing is consistency, right? Because a lot of people, I'm sure you've seen this as well, are very hit and miss when it comes to especially their capital raising marketing, right? So they've got a deal on the go. They hustle. You hear all sorts of stuff from them. And then maybe they raise the capital, maybe they don't. But then it's crickets until there's the next deal. Then it's hustle. Again, I disagree with that. I think you should always be communicating with your list of prospective investors. That's why we recommend weekly communications. You should always be having these investor meetings. And you should always be building up that core group, getting those investor ducks in a row, getting those people lined up, ready to go. So consistency is super important. Plus, I mean, think about this. If you're asking somebody to invest $100,000, $150,000 with you to do a deal, they want to know that you're a reliable, consistent kind of a person, right? So if you're not showing that, if you're not showing up that way, that's going to damage your credibility with your investors.
Yeah, I think that weekly newsletter is such a good format and to include those elements. And, you know, even when you're not actively raising money for a deal, just giving them updates on what you're seeing in the market or how your current deals are doing, and, you know, what you might be looking for in the future, what's going on in your life, all of that makes a big difference.
Yeah, so that's why we also recommend that you shake it up a little bit. So, for example, perhaps the first week of the month you might send out that newsletter, and then the next week it might be a short blog post, and then the following week it might be that idea like you had, a short video. Hey, here's some of one of the big benefits of investing in Airbnb, or here's an example of a deal that we're working on, or something like that. So mix it up, shake it up a little bit, so it's not always the same thing coming out.
Hold that thought for a second. Are you a new real estate agent looking to jumpstart your career? Or perhaps you are an experienced agent looking to build and scale and get to the next level. If you are, I've got great news for you. After building and scaling multiple real estate businesses, I am now taking my real estate team to all 50 states. In fact, it's going to be international. I'm going to offer cutting-edge technology, training in lead generation, team building, investing, and additional opportunities to build revenue streams. If you are interested and want to learn more about this opportunity, send me a text message directly to my cell phone, 703-638-4393. Again, text me at 703-638-4393.
What else should people think about, or where can they go to learn more? I know you've got a new podcast specifically geared for this type of investor.
Well, one of the other tips I want to leave your viewers and your listeners with is this, and that is, again, I don't claim to be a securities specialist or a lawyer or anything like that, but I see so many people making big, potentially disastrous mistakes when it comes to raising capital, and that is they start pitching their deals everywhere to anyone. Right? Especially on social media. We see this all the time on Facebook. Hey, I've got this great deal. DM me. You know, it's going to get this kind of ROI. DM me if you'd like details. Well, that's pretty dangerous, right? Because my understanding is it's actually illegal for us as mom and pop real estate investors to directly solicit investors from the general public, right? Unless you're licensed to do so, or unless you're set up with specific exemptions or offering memorandums or specific corporate structures.
Yeah. No, if you've set up like a 506C, I believe is the number. You can do that direct.
Exactly.
General solicitation, but
you're probably not doing that for a single Airbnb.
Yeah, it's about $25,000 in legal work to get that going. So, you know, that's something that you probably don't have to think about until you're like raising $1 million at a time.
Yeah, from multiple different investors at the same time. So if you're, again, a mom and pop just getting started, don't do that. Don't be blasting everything out to everybody and anybody. Laser focus in on your existing network, your friends, your family members, your coworkers, business associates, people you have that pre-existing relationship with, right? Because we got to think about it. If you don't have a huge track record in real estate, and if you don't have much of a track record working with other investors, quite frankly, who else is going to invest with you, right? You got to focus on people that, you know, for somebody to invest 50 or 100 grand with you, they need to know you, like you, and trust you. If you focus on your target group of your network, they already know you, they already like you, to a certain degree, they already trust you, maybe not with 100 grand yet, but you're much closer. So that's what we do with our clients is to get started with, let's laser focus in on your existing network first. Does that make sense?
Oh, I love that, David. Where do they find the podcast?
Yeah, man. So I'm really excited because I've just launched a brand new podcast called the How to Raise Capital 101 Show for real estate investors. You can find that anywhere you like to listen to podcasts, the How to Raise Capital 101 Show, or you can check it out at raisecapital101show.com. And here's the whole goal, Dan. The whole goal is to help newbie capital raisers raise their first 6 figures in a matter of weeks, and even their first 7 figures in a matter of months, without chasing after investors, by attracting investors to them instead of having to pick up the phone and dial for dollars or network or schmooze or do any of those salesy kinds of things. So Again, that's the How to Raise Capital 101 show.
How to Raise Capital 101 show. Make sure you guys check that out. Before we wrap up, I always like to end with the HyperFast round if you're ready for some rapid fire.
I'll give it my best
Q&A.
shot, my friend.
All right. Biggest piece of advice to a new real estate investor.
Get good education, ideally from somebody locally that's doing what you want to do.
All right. What's a common mistake you see successful investors making?
Starting to just kind of lay back on their laurels, right? Rest on their laurels. So you always have to be marketing. You never want to take your foot off the pedal there. So don't get too confident.
All right. If you had to start from scratch, you couldn't take your money or your connections with you, only the knowledge you've gained from everything you've done. What's the first thing you'd do?
The first thing I would do would be to jump right into a specific market and make as many new connections as I possibly could.
So build that network
Exactly.
up.
Join a local RIA, join a local real estate investment meetup, those kind of things. Get in there, actively participate. Don't just sit back and passively wait for things to happen.
When you're not working on real estate or teaching others about it, what are you most likely doing?
My wife and I love traveling. We just recently got back from an amazing trip to the Balkans in Europe, the Balkans in Greece. We spent about 19 days there. That was absolutely phenomenal. Our next trip is booked for Spain and Portugal, so we love traveling.
All right, last one. Where do you see yourself 10 years from now?
I see myself doing what I'm doing right now because I love what I do.
Awesome. One last time before we sign off, how do people find the podcast, and then how else can they connect with you?
Thanks very much, Dan. So again, the new podcast is called the How to Raise Capital 101 Show. Anywhere you listen to podcasts, or raisecapital101show.com is the best place to find me. My main website is called moneypartnerformula.com. moneypartnerformula.com.
All right, check out the moneypartnerformula.com. Thank you, everyone, for tuning in, watching, listening. Make sure you share this episode with other people that could benefit from it, and we will see you next time. If you enjoyed this episode, be sure and go to hyperfastagent.com to learn about upcoming in-person and online events. And don't forget to share this show with someone that you think could benefit from hearing it, and make sure you subscribe on YouTube or anywhere that you can find podcasts.
Thank you for tuning in to this episode of the HyperFast Show. Subscribe to us if you want to make sure you get the latest and greatest HyperFast shows. And remember, we love reviews. Reviews help us bring better and better guests and improve our shows. So give us the good, the bad, and the ugly. We hope you enjoyed the show, and we will see you next time.
Hey guys, thanks for sticking around to the end. I hope you enjoyed that video, and if you want to see more, click right here. And if you want 100 real estate tips from my best-selling book, click right here to download them instantly. And if you're new to this channel, click below to subscribe.